what is market capitalization, and what is Sensex and Nifty. What is market capitalization? Now, after an initial public offering, the shares of a company are listed on the stock exchange, where they can be bought and sold between investors. Now, how are the prices of these stocks determined? Now, you may remember not very long ago, the prices of onions had skyrocketed. The reason for this was that the supply couldn't match the demand. Similarly, the prices of stocks are also determined by the demand and supply dynamics. Now, demand and supply dynamics is easy to understand. But why investors would demand one stock over another, that is the tricky question. Because each investor who participates in the stock market comes with his own set of ideas and perceptions about different stocks. Now let's take an example. Now let's assume that I believe that ITC, which is basically Indian Tobacco Company, is priced relatively cheap and hence makes a good investment. Now you on the other hand know for a fact that almost 75% of the company's revenues still come from tobacco and only 25 to 30% of the revenues comes from its consumer brands like Ashirwad Atta or Sunfeast or Savlon. So you decide that if you actually want to participate in a company that manufactures consumer goods, you'd rather buy a Hindustan Unilever. So now here, while I would rather buy an ITC, you would rather go in for a Hindustan Unilever. And hence, the demand and supply dynamics like these by different investors across the stock market decides the prices of each stock that is in the stock market. Now coming to the big question. What is market capitalization? Now, market capitalization is nothing but the price of a share multiplied by the number of shares outstanding. Now, in short, it gives a sense of what a particular company is worth to its investors or what an investor believes the future prospects of the company would be, and in short, what an investor is willing to pay for that company. Now, another related concept is free float market capitalization. Now, this basically includes only those shares of a company that are actively available for trading. Now, since the promoters of a company do not actively buy and sell their shareholding, which means that their ownership in the company does not keep changing. Example, Mr. Mukesh Ambani will not sell his ownership or his shareholding actively and regularly in the share market. Hence, while calculating free float market capitalization, the promoter's holding is excluded. Now let's understand these two concepts with an example. So let's assume that a builder has around 1 lakh square feet of residential space and each square foot costs around 1000 rupees. So the value of the entire property is around 10 crores, which is basically 1 lakh into 1000. Out of this 1 lakh square feet, the owner decides to keep 20% or 20,000 square feet of this residential space for himself and his family.
Now he decides to sell out the remaining 80,000 square feet. Now, for any person who is interested in buying the property is only going to be concerned with the 80,000 square feet that is actually available for purchase.
Now, let's put these concepts together. Now, each square foot is like a share, and the 1000 rupees that we are paying for each square foot is like the share price. So, the 10 crore value of the property which is basically 1 lakh shares into 1000 rupees per share, is like the market capitalization. And the 8 crores, which is actually available for purchase, is like the free float market capitalization. Now, if this concept is reasonably clear, it would be easy to understand what is Nifty and Sensex. Now, Nifty and Sensex are both examples of an index. Nifty is an index which is offered by the National Stock Exchange, and Sensex is an index offered by the Bombay Stock Exchange. Now, that brings us to the question, what is an index? An index is a basket of stocks representing a certain portion of the stock market. Now, let's understand this with this graphical representation. Now, Nifty 50 is a basket. Some of the stocks in this basket are Reliance, Ultratech, Airtel, Maruti Suzuki, L&T, Bharat Petroleum Asian Paints, and more. A total of 50 stocks. Now, these 50 stocks are by value the largest 50 companies listed on the National Stock Exchange. Now, as you would understand by now, Nifty 50 is basically the largest 50 stocks on NSE, while Sensex is the largest 30 stocks listed on the BSE. Nifty and Sensex could give us an indication of which way the markets are swaying. Now, just remember that both these indices is a combination of stocks, and not necessarily all these stocks would move in the same direction. So, say, for example, on a particular trading day, the Nifty closes positive. This does not mean that all the 50 stocks in Nifty have closed positive or with gains. It is possible that some stocks in the index could have closed on a negative note. But the cumulative or net effect of all these 50 stocks put together has enabled Nifty to close positively. Now, in the international market, you may have heard of Dow Jones, which is basically an index which is offered by the New York Stock Exchange, or FTSE, which is FTSE, is an index which is offered by the London Stock Exchange. These are just examples of indices that lie outside our country. This table has listed the top 20 companies which is part of the Nifty by market capitalization. Now, Reliance is at number 1, which has a market cap of close to 13 lakh crore. Now, at the 20th position is Axis Bank, which has a market cap of about 1.3 lakh crore, which is 1/10 that of Reliance Industries. Now, let's say tomorrow, once the trading starts, Reliance has a gain of 5%, whereas Axis Bank loses 15%. But now, because Reliance is 10 times larger than Axis Bank, the 5% gain in Reliance would much more than overpower the 15% loss in an Axis Bank. Now, at this stage, it would be beneficial to point out that the Nifty and Sensex represent only the top 50 and 30 stocks in the listed universe, which means that out of the 5,000 to 6,000 stocks that are listed, these two indices represent only the top few. Now, remember we had discussed what is market capitalization. Now, using that definition, the regulator has defined large cap, mid cap, and small cap companies. Now, the top 1 to 100th company becomes part of the large cap universe. These are also known as blue chip stocks. Now, 101st to 250th company is part of the mid cap universe, and 251st company onwards becomes part of the small cap universe. Now, in the large cap space, we have already discussed a few names. such as Reliance Industries, Bajaj Finance, Hindustan Unilever, Asian Paints, Bharat Petroleum, Sun Pharma, and so many more. These companies have more stability, lower risk, and stable growth, and best suited for investors who want a lower risk on their equity investments. By lower risk, I mean that while they still carry the risk of an equity investment, the risk could be lower compared to mid and small cap stocks. Mid cap stocks include names such as TVS Motors, Lal Path Labs, Amara Raja Batteries, etc. These companies usually have better growth prospects and usually are able to deliver better returns. However, they are also more risky than large cap stocks. I think by now you would have got a drift of what small cap stocks are. Now, some example of small cap stocks are Balaji Telefilms, Cox and Kings, Inox, etc. Small cap stocks have the highest potential for growth and hence can deliver some great returns in the long run. The small caps of today could be the mid caps of tomorrow and the large caps of, well, day after tomorrow. But remember, these stocks also have the highest risk since not all small cap stocks can make it to the big league. So with that, we come to the end of this video. I'm going to stop there and allow you to process all that information. And till we meet again in the next video.